The Dubai real estate market is finished. It is over. That's what the headlines are screaming right now. If you look at the Dubai Real Estate Index, it's down 25% in the last 30 days. On social media, the so-called experts are calling it the Great Correction. They're telling everyone the bubble has finally popped. But then you talk to brokers. They're bragging about record-breaking deals and business as usual. You are hearing two completely opposite stories. Both sides are missing the point. To understand if your money is actually safe, you have to look at the one thing everyone panicking about, that 25% crash. The number is real. The Dubai Financial Market Real Estate Index has indeed dropped by 25% since the tension began. But here's the part that nobody's telling you, or maybe they don't even know about it. The index has absolutely nothing to do with the property price in Dubai. Why am I telling you the index does not matter? Because it's a stock market index. It tracks several listed developer companies. And Emaar alone and its entities drive nearly 90% of that index movement. What you're seeing is not a property collapse. It is stock market investor, mostly institutional funds from outside Dubai, panic selling Emaar shares to reduce their risk during regional uncertainty. Here is the difference. Stock traders click sell in a second. That is liquid paper. But you cannot one-click sell a villa in Dubai Hills. Do not confuse stock market fear with real estate facts. If Emaar price drops, it doesn't mean your apartment in downtown is worth 25% less. It means Wall Street is nervous, not the market is dead. But wait, what about this Asian boasting about record deals happening right now? They are just as misleading as the headlines. When an Asian tells you they closed a record deal today, they're talking about a transaction that actually started 3 months ago. Look at the journey of a Dubai property deal. On week 1, you sign the reservation form. Okay, then you need to pay the 24% down payment, and that will take you maybe 1 or 2 more weeks. Okay, then the developer prepares the SPA. This signature process alone takes 4 to 6 weeks, sometimes longer. By the time that deal finally hits the official Dubai Land Department database, 4 or 12 weeks have passed. So that boom data you see in the news today, that is the pre-conflict market. We are only 25 days into this current situation. Every massive deal being registered today was priced, agreed upon, and signed in Jan or February, long before the tension started. So if you want to know what's happening today, not 3 months ago, we have to ignore the headlines and the bragging brokers. We have to look at the two indicators that matter: listings and rentals. These numbers tell us exactly what sellers and tenants are thinking today. They answer the questions everyone is asking. Is the market collapsing? Are they massive distressed deals? Has rental demand vanished? And how are developers actually reacting? Let's start with listing volume. Platforms like Property Finder and Bayut are the fastest way to spot a panic. If owners were desperate to exit, we would see an explosion of new listings and race to the bottom on prices. We analyzed every single new sales listing since the tension began 25 days ago and compared it to the months prior. In the chart I'm showing you, the red represents the period since the tension started, and the blue is our pre-conflict benchmark, the few weeks before the conflict. As you know, apartments hold the largest share of the Dubai market, so let's start there. Over the last few weeks, we've seen between 3,000 to 5,000 new apartments listings. Is that high? No. It is perfectly within the normal range of 3,000 to 7,000. There is no spike, there is no flood. For villas, we actually see a 10% decline in listing compared to normal levels. And for offices, the drop is even more dramatic. Volume has essentially stalled compared to the usual 100 to 200 listings per week. So what does this data actually tell us? Why does it even matter? It proves that investors are waiting, not panicking. Smart owners are postponing the decision to sell because they have high-quality units and zero financial pressure. They know their assets value, and why would they even sell at a discount during uncertain times? Panic selling only happens when listing volume goes up and prices go down. Right now, we see the exact opposite. The supply is tightening because owners know exactly what they hold. We've looked at volume, but what about the prices? This is where the crash rumors usually starts. Let's look at the ready market listings. This chart shows the price dynamic for apartments, villas, and offices. The data is consistent across all three. Everything is within the normal range. We run the same analysis for off-plan listings, and guess what? The trend is identical. But why do we look at this? Because listing prices are the ultimate panic meter. If owners were desperate, these lines would be nosediving. But the fact that average prices are holding steady proves there is no massive distressed deals happening in Dubai. I know the rumors are everywhere. People claiming Dubai is flooded with cheap, distressed real estate. It is simply not true. At an average market level, the flood does not exist. Owners are standing firm because they don't need to exist. Now, if you don't trust listing prices, I have something even better. Rental transactions. Unlike sales, rental contracts hit the Dubai Land Department database almost instantly. There is no 3-month lag here. This is the pulse of the market today. First, look at renewed contract. We saw a small dip in the first week of the tension, followed by a massive surge in the second week. One week compensated for the other. The market did not change. People just paused for 7 days, then went right back to signing. But when we look at new rental contract, we see the first sign of pressure. Normally, Dubai sees 4,000 to 5,000 new rental contracts per week. Right now, we're seeing between 3,400 and 3,800. This is a clear decline, but this is not a crash. It's just a consequence of current flight restriction and regional tension. Landlords are starting to feel the heat. While these are still happening, the volume has dropped. Here's the insider insight. If you are an offline investor with the property handing over soon, listen closely. You will likely have to be more aggressive with your pricing than you were 3 months ago. You are not competing in the same market anymore. There is a slowdown in demand, not a collapse in value. Now, let's talk about the future. Off-plan launches. Many people think developers have frozen their project. The data says otherwise. In the first week of this tension, we had 11 new launches. In the second week, 12. The cranes are not stopping, but the way developers are doing the business is changing. If you're waiting for a massive price drop for the big developers, stop wasting your time. It is not going to happen. Instead, they are offering massive flexibility, like 1 or 2 years of free service charges, or maybe relaxed payment plans. I personally just invested in an off-plan property last week for the exact reason. I did not wait for a crash, I negotiated the terms. I secured a deal that protects my cash flow while everyone else was busy reading scary headlines. The window for these silent negotiations is still open. If you want to know which developers are currently offering the best payment plans, or if you want to see the exact structure of the deal I just signed, send us a message on WhatsApp and we'll answer you the same day. My team and I are tracking every silent discounts in the market daily. Stop being a spectator to the headlines. Start being an investor in the facts. I'm Selma and I'll see you on the next video.